What are you expecting from this report? Is the softness in the housing market, that unseasonably cold weather, is that going to weigh on this stock? And if so, in what areas?
Yeah, and I think, expectations going into this quarter should be kept fairly low. If we think about the pressures that were on the home improvement sector this quarter, besides unfavorable weather, there was also lower lumber prices and lower tax refunds. There was this combination of issues. And so you mentioned that the street thinks sales will be down about 1.5%. We think it's actually going to be a little bit worse this quarter, more like down 3 to 4%. But the good news is that we do think that things are getting better. If we look at the data that we track, the BAC credit and debit card spending that we look at from March into April, we did see those year-over-year declines get a bit better. So we think the commentary from the company is actually going to sound relatively optimistic about the trend coming out of the quarter.
All right, so we mentioned you have a long-term, a bit of a bullish outlook for the stock. What's your rating? What's your price target?
Sure. So we have a buy rating on the stock. We think that there's actually quite a bit of upside from here, even up into 360. So we think that this is a really good long-term opportunity. We think that when you think about high-quality retailers, Home Depot is certainly one that comes to mind. And the total shareholder return here is very attractive. This is a company that's still growing its dividend, still paying out that dividend on a consistent basis, and also is buying back its own shares on a pretty regular cadence as well. So in addition to what we think is probably going to be pretty tepid earnings growth this year, and then some recovery in the out years as we get some of that pent-up demand for home improvement coming through as housing turnover picks up, right? So where people are stuck in their current homes because they can't take on a higher mortgage rate at this point, and there's not that many homes available for sale. So once we get a little bit of release of that housing turnover, we do think that there will be some catalysts for home improvement to improve into 2024 and 25 as well.
How does inflation play into this whole picture that you're painting for Home Depot, its rival Lowe's, and the broader home improvement sector? We have seen inflation moderate a bit, but in some places it's been especially sticky. How does that impact the home improvement retailers?
Sure. I mean, so we've started to see some prices softening in categories like appliances. I mean, I think big ticket items in particular, where the customer is often using some form of financing as well, credit card or other forms. And so those larger ticket items where we're seeing some pricing pressure. And so that's where we see that inflation starting to come off. Other categories, where it's, high demand, not that much of pricing pressure. We're starting to see those, holding fairly steady. So we do still think that average ticket is going to be higher year over year for the course of this year and in this quarter as well. And transactions are what is generally weighing down the sales growth. But as we get into the second half of this year, the comparisons against last year get easier on the transaction side, and we'll probably start to see some of that inflation continue to moderate. So we think that we'll sort of see a flip in the second half where transactions start to improve and where average ticket starts to come down a little bit.